Hey, this is June from Turning Point Life Investment, and this video is for the week ending April 25th, 2009. Okay, let's go ahead and take a look at the market, starting with a 3-year weekly view of the SPY. Really, not a whole lot has happened this week. We managed to actually pull in a consolidation week. Notice how we had pretty much 6 consecutive straight up weeks, and this is the first week out of that last previous 6 that we managed to pull in a consolidation, or at least a relatively down or flat week. Now, I mentioned from my last video that I did manage to expect something like this, a little bit of pullback. Actually, I expected a little more pullback, but the market obviously didn't give us that much. But I'm going to go into a daily view and show you that we're actually set up for another down week starting Monday. Okay, going into a 6-month daily view. I mentioned last time that the SPY, or the market, is showing some kind of terminal pattern. This is usually a termination pattern, some kind of triangular pattern. Now, we actually managed to break down from that support level, and I told you to keep an eye out for this support level when it's broken. And on Monday, it managed to break that. But the following 4 days, we managed to actually rally and come back and retest it. So this is very classic pattern where broken support is now acting as resistance. Okay, I zoomed into an hourly view just to give you a clear picture of what I'm talking about. Notice how it was fitting perfectly within this pattern. On Monday, we managed to break down from it. Now, what happened is a lot of times you get a lot of retests back into this line right here. The support line is now acting as resistance line. Okay, and on Friday, we managed to retest it one more time. And what's interesting is that notice this huge gap right here. Okay. Let me take away the study, so sometimes it's better to take away the study. Okay, so I took away the studies. Notice this huge gap right here. Now, gaps are usually great for support and resistance, and in this case, it will act as resistance. Notice what happened on Friday. We managed to come back and retest this gap. Okay, so it's tested. It actually closed the gap. So most gaps, I'm sure you heard that most gaps like to be closed, and in this case, it actually closed this gap right here. So if the market does come back higher, this is the new reference high, or the new reference resistance level, slightly above 87. And of course, right here is our previous resistance level, 87.50, around there. So with this closing of the gap and the retest of the broken support turned resistance, I'm expecting a drop following this week, if of course everything follows through. If not, if we do get a push higher, then we probably have to look on a daily view to see what's a good target. But as far as next week's concerned, I would expect a retest of this previous support up in the 82.70, around there. Ultimately, 81.5. Notice how there's plenty of gaps for the market to close. So that's another gap that the market likes to retest and close. That's around 81.50. And then ultimately, I don't know if it'll happen next week. It might take a couple of weeks, but 78 is my ultimate target for this pullback. But at least I would expect the market to retest these two levels next week. All right, next I'm going into the VIX. So the VIX, after breaking down from support, is coming back to retest this area as resistance. Very similar to what we just saw with the market. Right, broken support now acting as resistance. Right now, this 20-day moving average is acting as resistance. Notice how there's a slight divergence here with the VIX and the market. Within the last 4 days, the market managed to rally near the previous high of last week, but the VIX stayed relatively flat. So you see a little bit of divergence here. If the market continues to consolidate, we can expect the VIX to go sideways as well. However, if we do get some kind of sell-off, we might get a pullback towards this 50-day moving average. So overall, as far as the VIX is concerned for this week, it's showing a little bit of bearish divergence, which kind of leads me to think that next week, like I mentioned, is most likely going to be a down week. Okay, just going back to recap, this is the daily view with no studies at all. Like I said, nice pullback towards retesting as resistance. So just some targets for you guys to keep an eye on. Somewhere around the 82.50 and then the 81.50 are good possible targets for the market to pull back towards if we're bearish next week. However, just in case, we always want to expect the unexpected. If we do get some kind of upside surprise, then the 88 level would be the next resistance level, and of course 95 would be our ultimate target for bullishness. So keep an eye on for these levels in case we do get an upside surprise, but downside levels will be around here and ultimately around 78.